Hey everyone, Dan here. Today we're going to take a look at ATIP. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also, if you'd like to receive a once or twice per week email newsletter from me, there is a Google form in the description where you can sign up for a newsletter that I'll be launching in about a month. And before I send out the first one, I'll tell you a bit more about it and give you the opportunity to opt out, if it's no longer something that you'd be interested in. So kind of no big risk at this point of tossing your email in there if you'd like sort of supplemental info on a lot of the videos that I do, as well as some additional plays that I just don't have time to make videos about. All right, so ATIP was actually suggested by a couple folks in the comments section of other videos, so I also welcome you to do that. If you have tickers you'd like me to cover, just drop a comment below with the ticker symbol. And I wasn't familiar with it. It's a pretty low volume stock compared to the stuff that I typically look at. So you see the 3-month average here, definitely under 1 million, and today tracking like right on course with that. We're about 20 minutes before market close at this point. So ATIP was a SPAC that now came to market. It's a physical therapy business, so definitely something kind of different. And this one is an interesting case study, just from the perspective of, if you didn't notice it yet, there's this enormous gap down, which at this point that happened in February, and so we are almost 5 months removed from that gap, and it's not looking like it's showing any intention of filling it. So, and we'll talk about that gap in a second. The other interesting thing here was it really sort of looked as though it was developing a floor, like a price floor here, right just under $10. And then, we've since seen it push down well under $9 at this point. And so I'm happy to sort of put in some price zones where we might find additional support to the downside, some potential places to the upside where we might see resistance zones for areas of like dip buying into price strength, taking profits, things like that. First, let's just sort of like get a grip on the news cycle for ATIP. So on the 22nd here, the press release came out that ATI Physical Therapy is set to go public through a business combination with Fortress Value, which the business combination is the merger with the SPAC. And you see additional news stories here all on the 22nd of February. So if we look back here at the chart, we see here this is the 18th, the 19th of February, and then the 22nd of February. So seemingly the markets, the previous SPAC investors leading up to this official announcement that this was going to happen, seemingly not happy with the target that was chosen by the SPAC. The selection of the target usually, I just did a one on Proterra Inc. Proterra Inc. I think it's called, and showed there a much more typical life cycle of a SPAC into merger price action. That one, if you want to go back and look at that, that is pretty typical what we see with these types of endeavors. This is not that typical. This basically screams to me, hey, the people who bought into the SPAC with the expectation that there'd be a cool or promising target chosen were really disappointed to the tune of down 13% or something in a day. So that's not what you want to happen when you announce a target. When you announce a target, you want this to happen. If you looked at this, what you'd want to see happen is like, hey, yeah, we're really gonna do this. We're gonna merge with this company, and we're gonna have a vote in the future. And as long as there's no huge hiccups or road bumps or like something unexpected happening, this merger will go through, and your shares will be converted from this SPAC to this company. Usually what you want to see after you make that announcement is exactly what happened here. This big run up, even if there's sort of like sort of a little breath taken or a little retracement happening here, you want to see this happen on that news, not this. This is really, really atrocious. So I don't know what went on in the part of, the folks who were sponsors or sort of the CEOs of the SPAC, the sponsor. I don't know what they were thinking with this one, but clearly the market did not respond positively to that selection. And we see back here, here's when the SPAC launched, and even at that point it had dipped down to $9.65, and so now it's trading well below what the lowest price for the SPAC was, and presumably this SPAC, it looks like in typical fashion, had a $10 redemption value, whereby if you didn't want to convert your shares over, you could redeem the SPAC shares for $10. And at this point, looks like it would have been a good move. I mean, this is just this is not a good sign. This is not. I've tracked a lot of SPACs. This is very uncommon. This is not what you want to see at all. So I will chart it, but I will preface it with just saying that it doesn't appear as though the market wants anything to do with this company for whatever reason. I have no idea. It could be like great people run the company. I don't know. I don't know anything about it. But if we look additionally up here, it was June 17th, that looked like to me. June 17th, news on Fortress Value Acquisition Corp, FAII, now under ATIP. So that was the date that it happened, 6/17. And if we look on 6/17, that was right here. So additionally, we see some stabilization, some attempt at like hype, but that really only got it from, say, $10 to about 10 and a quarter. And then after the merger happened, the next day, trading under ATIP, it was just plummeting, and it's tried to recover, couldn't even get back over, really couldn't get support at, we'll say, 950 even, and now it's dropped down to 875. So really just not a good situation. Again, like I said, I don't know much about the business itself. I would say there is some varying information on the analyst data, and I'll go through the three places that I looked. So the first one is here on Webull. So this says it's based on 3 analysts, 1 strong buy and 2 buys. So that averages it out to a buy rating and puts the average price target by way of the analysts at $13.67. So that would give it quite a bit of upside if it were to even come to that, even to the low. I'm sure folks that are in this one would be happy if it just reached the low analyst price target. The other place that I looked was on Ortex, of course. They have 2 buy ratings from analysts, and they have the price target at $13.50, so that's a potential return of almost 50%. But again, it's just not showing any indication of running in that direction. And then on Tip Ranks, which also generally does a good job of accumulating, the relevant analysts' forecasts, they have 2 ratings, which put it at a moderate buy of $13 on average. So it looks like they have a high of 14 and a low of 12. So those are the 2 analysts' forecasts that they have, putting this at 48.91% upside. And these came in the last 3 months. So it did look like there were some analysts. This seemed also kind of odd to me. Maybe it happens more than I've realized, but it stood out to me that there were some analysts that came in right here, initiated at buy by benchmark. This was in May, so it was about 6 weeks before the actual merger completed and the ticker symbol changed. So I don't recall often seeing analysts coming in and initiating a bunch of ratings prior to the merger happening. Again, maybe it does happen and it's just slipped by me in the past, but those are the odd things that stood out to me. These analysts jumping in early, this big fall off once the announcement happened. And even then, when that was happening and there was, initiated buy by benchmark on 5/4, that would have been right here, and it just did nothing. It just continued sideways. So again, the analysts seem to think that there's like 50% or so upside here. The market, because of this and because of the recent price activity, seem to really dislike it. So I don't know the ins and outs. Again, I was just kind of taking a look at the news and the ratings and the chart. I didn't get into trying to dissect the business model. That would make for an even longer video. And I know a lot of folks are like, wow, could you think about making some shorter videos? And yes, I can. It's obviously a challenge for me, but I absolutely can. And I will try to sort out how to do that and why and when in the future. But obviously, there's some price targets that we can grab out of here. I honestly don't really know where to put a lower end price target because it is the lowest that it's ever been at this point. I mean, here's, well, that makes it super ugly. But here's essentially the max chart, and you see we're well below the lowest price in this stock's existence. So, and it's not like in a channel, it's not like under specifically a downtrend. So it doesn't really like lend itself in any way, shape, or form to trying to give an idea of where the downside risk might kind of subside and a floor could be attained. It's really unfortunate for folks stuck in this one. Sorry if you are really like digging this company. It's definitely not doing you any favors. Pretty challenging one. But there are a few stops along the way to the upside where if you did want to buy into price strength, which I can sort of describe for a minute. So let's say you thought, well, if this can get back close to $10 from where it is now, then I would think that, you know, maybe it's recovering a bit, maybe there's more positive sentiment, maybe some good news has come out, and I would feel more comfortable buying into the stock then. So maybe you wait for the stock to come up and eventually sort of try to push to that 1017 and get like support there. And let's say that, as I would expect it to do, it gets rejected off of there because it hits resistance. Then what you could go ahead and do is start to dip buy, assuming that it'll bounce on one or several of these zones here in the mid to high nines. So let's say if it came down here just below 10, you're like, okay, I'm going to start buying in right at 10 or just below 10, and I'm going to dip buy it all the way down to 950 or all the way down to 960 or something like that. And you're looking for it to bounce along the way. That would be dip buying after a show of price strength. And so these targets to the upside can be used for that too. If you're sort of willing to wait and be patient and see if it can recover, you know, that could be one way in which to try to play this one. But yeah, beyond that, to be honest, I don't really know what to tell you. We can take a quick look at the indicators. RSI, obviously pretty low. I mean, these are going to be very obvious things, right? There's not going to be anything here that's like earth-shattering. There's no like bullish divergence here at the moment that would indicate that there's like an imminent sort of trend change that's going to happen on ATIP. So, you know, the real estate between the signal and the MACD line still continuing to expand. It looked as though the bearish momentum might have died down, but then it picked back up. So, you know, sorry if you got caught in this one. I don't know what happened, to be honest, from a chart perspective, though. It's not looking good, and I'm not quite sure where the floor will be, to be honest. It tried to establish a floor here, tried to establish a floor here. It even tried to establish a floor here, and obviously it hasn't been able to hold any of those zones, and now it's pretty far away from that where it tried to establish at 895 down to 859. So as a percentage, like, it's down a significant percent from that, so it's not looking as though it's like going to quickly regain that and you know, get support there. So more to be seen from this one for sure, but you know, good luck if you're in this one. I wish you the best, and sometimes these wacky things happen with these SPACs. This is an interesting one just for the sake of like it being so different from what we see with so many of the typical expected SPAC run-ups. But also take this as a warning. Whenever we put out videos and say like, hey, here's what the SPAC life cycle often looks like, this can show, or this shows that can be very, very much not the case. And things can go very much against you if you're just blindly assuming that any given stock is going to follow, or any given SPAC is going to follow that typical life cycle. So be very cautious with those things. All right, well, no matter what you're trading this week, I wish you the best of luck, and I appreciate you watching. Feel free to share these videos if you found it helpful. Reddit, Twitter, Facebook, those are all great places, or wherever you share stock information. All right, well, I will see you in the next one. I appreciate you watching, and I guess I just said this, but I gotta end with my signature sign-off. I will see you in the next video.